morning and thank you for having me. As I was introduced, my name is Germain. I've been in the fintech space for about maybe 7-8 years, which is not a big career, but maybe in the fintech world it might be something. I studied at Fidor Bank, for those that may remember. It was one of the early pioneers of digital banking actually, and eventually banking as a service, and most recently joined Solaris Bank. And I'll be talking about banking as a service, specifically for e-commerce and retailers, and hopefully you'll get to learn something today in those 9 minutes and a half now. Just a quick question before we start. How many of you are familiar with Solaris Bank in the room? Okay, a few ones, good. So I could go on about Solaris Bank, but I thought this slide could maybe summarize a bit best what Solaris is up to. So Solaris Bank is one of the first, I would say, banking as a service provider, right? So essentially it's a tech company that rents or that provides banking license, its technology in white label for anyone, say a fintech or a retailer, or think about NOS in Portugal, or anyone to build banking services on top, right? So I think that's a good slide to introduce a bit the topic around embedded finance, because if you look at the logos of Solaris, initially we powered a lot of the neobanks across Europe, right? If you look at Vivid, for those that don't know, it's a competitor of N26, Revolut. Tomorrow Bank is also a green bank or bank towards sustainability. So these were the early days maybe of digital banking. Phenom as well is something around, maybe closer to Coverflex, around expenses, receipts and so on. But now more and more what we see is the likes of Samsung, BP, for sure you know, the likes of RCI, which is the Bank of Renault. You see like these non-financial services coming into the space, right? And to build something to enhance the experience, to create customer stickiness. So that's what Solaris is about, truly. This is a slide from our strategy deck, so if there's any pictures to take, maybe not the best time. No, I'm joking. But it gives you a good overview of the different industries that we've seen, and we see where the most of the potential is around embedded finance, right? So we see neobanks essentially. I mean, you still see a lot of new digital banks coming in, focusing specifically maybe on SMEs or a specific segment. Tech, right? No surprise, we've seen Amazon, Apple, many of these big tech now are stepping into the space. Mobility, I think you have a panel afterwards talking specifically about mobility, very big segment. Travel and hospitality, we see a lot of airlines, a lot of hotel chains, Hilton and so on, trying to embed financial services, whether it's loyalty cards, whether it's wallets for their customers to have a smoother experience in the hotels and so on. And retail and e-commerce, where we see most of the potential. The use cases there is a lot of the, let's say, the big retailers, right? If you look at Carrefour, for example, in France, have their own bank. Walmart in the US also for a long time has lending for their merchants. They have buy now, pay later as well. They have all sorts of financial products. So there's definitely a big space in there. What we see also a lot is a lot of these retailers had what we call closed loop payments, right? They had these like loyalty cards that you would use mostly into their shops. They were typically relying on, I would say, old and legacy banks, and now they're trying to go for something more innovative, open loop payments where you can use that cards elsewhere, right? So that can tell them a little bit more about the data outside of their store. And typically, we see that the legacy banks might not be able to match the technology that someone like Solaris has, right? Or the user experience. So very big segments that we see there. This is just showing a research that we've seen. This was conducted maybe 2 years ago, so probably the numbers have slightly increased by now. But it's just to show you the willingness of people across Europe. Actually, this was conducted in Germany, but it is reflective also in the behavior of a lot of European consumers on their willingness to actually use the financial services or embedded financial product from their favorite retailers. So the research asked a lot of participants around how comfortable they would be to use X and Y services if they was offered by Amazon, by Lidl or DM. DM is basically similar to Lidl in Germany. And it seems that if we ask them around a current account, almost a third of them would be comfortable using a current account, a main account, if it is offered from someone like Amazon, maybe a fifth from someone like Lidl, and close to 20% for someone like DM, right? And as I said, this was a few years ago. There was already a willingness to at least consider it and be comfortable using financial services. If you're looking at credit cards, right, you also have around, yes, close to 30%. You have 15% and 13% from some of the retailers, right? So again, willingness to use even a credit card from their favorite retailer is there. And then finally, back to, I think that was mentioned before also, like installments, buy now, pay later, and so on. It was slightly lower, but still at around 15%, 10% and 11% for MediaMarkt, right? So I'm pretty sure these numbers now have not only increased, but probably you've seen now more and more in your shopping experience, these sort of options, the likes of Klarna and so on being offered. So it's not only coming, initially it's not coming from the retailers, right? Waking up thinking we want embedded financial services. It's also coming from consumers being more and more comfortable using financial services from their brands. And then now what's in it for the retailer? I think the previous session also briefly touched upon it. Right, it's creating stickiness, it's enhancing the user experience, right? I mean, the basic example is always around Uber, right? I think about your experience when you go to Uber, it's just smooth. You don't have to think about picking up your wallet and so on. So it's how can we make that experience smoother? How can we stick to customers? And then most importantly, what can we know about our customers? What types of data can we get, right? So we speak to a lot of clients. There's always plenty of reasons. We want to reduce costs. We want to do that. Actually, it's always boils down to two things. We want to increase our customer experience. We want them to stick around because they can go to Amazon, they can go to Apple, they can go to many other platforms. And what can we learn about them so that we can offer them a better experience and we can push them better products on our site, even if the business case is negative in some cases. Clock is running fast. So there's a lot of this. So that's maybe an overview of the types of data they can get from the likes of Solaris, from the likes of Visa, right? The processors, in terms of where they shop, who are my shoppers, what's their age, what's their typical spending patterns, right? So you see lots of details, right? So think about if you were on that side, right? If you are a retailer or an e-commerce and you have access to all this data around your customers, that makes it very interesting for you. I'd like to leave you also with a few numbers around embedded finance, mostly around retails and customers. I think first one is around 93% of Grab's revenue is coming from embedded finance. So Grab is a very big use case, mostly in Asia. They started as probably something closer to Bolt, where they were doing a mobility platform. Now they're a bit all over. They're doing also e-commerce and so on. But the point is that even though it's not their core business, most of their revenue is coming from either issuing an account for their drivers, issuing payment services for them, for the consumers as well at the point of sales, and in some cases also installment loans. 61% of consumers now have used or are in favor of using embedded financial services during the e-commerce experience. So we see it's already rising quite fast. Most people preferred really using the services at the point of sales across their experience. This one, I don't remember, 15% of the revenue, exactly. So around 50% boost in revenue from these brands is expected across the next 5 years, right? So again, think about retailers or other industries that they are struggling to find. I mean, margins are shrinking in a lot of industries. They are trying to find new ways to unlock revenues, and then through embedded finance, whether it's through buy now pay later to increase conversion, whether it's through wallets or cards, that pushes their customers to stay mostly in their ecosystem. They have the ability to find a new revenue, to either increase or find a new revenue line. And then, as I said, at least a quarter of consumers across Europe are comfortable now using financial services from their brands. Probably something you'll hear throughout the day. Nothing new here, but what it is truly about in a simple equation, it's a better proposition. Again, back to Uber, you just everything is easier. It's a better experience overall. It gives you valuable customer data and insights, new revenue streams that we just discussed for a lot of these customers. Reduce costs in many of the instances versus using a legacy bank or versus sending your customers to, I don't know, I'm from Belgium, so let's say ING, for them to get a loan and then come back a few days after. So eventually the result is really an increase in value for the customers and the ability to retain them. One last use case to finish up. This is CarNext. I don't know if they are beyond Germany, but basically they enable customers to buy online used cars. They're in this one as well? Okay, very good. So typically the experience they had before is they were working with the large partner bank. You would, let's say you would select the car that you want. You would have to wait probably a few days, maybe weeks, go physically to the bank to get the loan approved and so on, bringing your paperwork, maybe you forget one. So it was a very tough experience, and instead of that, they use Solaris to embed the lending experience, right? So it's not like Klarna where you click on maybe Klarna and so on and you have installment payments. It is branding CarNext. You stay in that experience, that shopping journey, and then in a matter of a few hours or a few days, maximum you get scores and you get access to purchasing that car. Thank you.